Welcome back to the Global Business Report here on Arise News. I'm Edia Aisian, coming to you this morning from Nigeria's commercial capital. China's top auto industry association says that automobile sales fell 11.7% in October, marking the fourth straight month of declining sales in the world's largest auto market. The sales drop to 2.38 million vehicles comes amid broader slowing economic growth and a biting trade war between China and the United States. It follows an 11.6% drop in September and a 3.8% fall in August. China Association of Automobile Manufacturers also disclosed that the overall sales for the first 10 months of the year totaled 22.87 million vehicles, down 0.1% from the same period a year earlier. We cross to Singapore for the latest from Arise Asia business correspondent Sandy Huang. Hi, Sandy. So Asia shares pulling back from multi-week highs today as the U.S. Federal Reserve tempers sentiments. What's the latest?
That's right. Shares are pulling back as investors exercise caution today. Here in Singapore, most sectors are in the red, and telco operator Singtel is in the spotlight. The company's third quarter earnings plunged 77% to its worst level in 15 years. That's due to a triple whammy of foreign currency movements, lower contributions from associate firms, and a halt in Australia's broadband rollout. Looking down under, Australian shares are also down. Metals and mining stocks were the biggest drags on the benchmark. Energy stocks also fell on weak oil prices, but financials were slightly higher, with top lender CBA gaining 0.5%. In Japan, the Nikkei closed down 1%. Worries about further trade tensions weighed on China-focused shares. Factory automation equipment maker FANUC are down 4.8%. Elsewhere, China stocks also fell 1%, shares dragged by financials after banking and insurance regulator pushed for credit support to private companies. The Shanghai Composite was down 1.3%, and Hong Kong's Hang Seng is also down 2%.
Well, Sandy, it's good news from insurer AIA Group. Today, the world's second largest life insurer posted a market value of 17% rise in new business in its third quarter. What's driving this growth, Sandy?
Well, the main reason is strong sales in its main markets of China and Hong Kong. These regions together account for about half of new business growth globally at AIA. The value of new business measures expected profits from new premiums and is a key gauge for future growth. That number rose to $979 million, and the insurer said growth in both China and Hong Kong are double-digit. AIA was the first foreign insurer to be granted a license in China. It listed in Hong Kong in 2010 after a spin-off from bailed-out U.S. insurer AIG. Now, foreign insurers like AIA have been gaining market share in China following a regulatory crackdown on short-term investments packaged as insurance. The company says despite recent volatility in financial markets, increased international trade tensions, as well as softening consumer and business sentiment, Asia's macroeconomic fundamentals remain resilient, and that's what's driving the boom.
Well, shifting down under, Sandy, Australia's Queensland state is set to unveil a proposed resource regulations next week. What will this new regulation entail, and who exactly will be affected?
Well, the regulations will require miners to pay into an insurance fund for the remediation of old mines. This would be the most significant reform of the state's rehabilitation framework in nearly 2 decades. If enacted, they will impact miners like BHP, Rio Tinto, and Glencore, which all have operations in the mineral-rich state. The government is also considering allowing some miners to post insurance bonds in place of large cash holdings, which would help smaller miners too. The legislation is designed to strike a right balance for the environment and the resources sector while ensuring that resource companies, not taxpayers, foot the bill for the rehabilitation of failed mines. BHP said they had been in consultation with the government over the issue, and although they don't support everything that's being proposed, they did feel listened to and understand why a discussion is necessary. Queensland's resources sector asked more than 55 $25 billion to the state's bottom line and contributes more than $4 billion in royalties. So the new rules will definitely have a profound impact on a large segment of the economy there.
Sandy, thanks for shedding more light on that. On the corporate front, Japanese companies may face an uphill battle in restoring trust. Now, a new poll is showing that almost 3/4 of Japanese firms believe their image has been hurt by a recent data falsification scandal involving the KYB. So can you tell us more about this?
Yes, well, KYB is a company that makes earthquake shock absorbers. Last month, it admitted to have falsified data on the quality of some of its quake dampers since at least 2003. This is just one of the latest scandals that has shaken confidence in Japan's manufacturing industry. Earlier this month, Hitachi Chemical said it found improper tests were conducted on nearly 30 more products. That's after Kobe Steel and Toray Industries both admitted to data falsification or other types of misconduct. Now, the Reuters survey polled 482 large and mid-sized non-financial firms. They responded anonymously, and 71% of them said the KYB scandal would tarnish Japan's reputation. But when asked if the scandal would affect their own business, 94% said it wouldn't. The same survey also found that half of Japanese companies expect new trade talks with Washington will boost exports to the U.S., but many also fear that there would be higher U.S. tariffs on Japanese products. So there's a mix of hopes and fears, and the compliance scandals are certainly not helping things there.
Well, Sandy, speaking of scandals, the recent Lion Air crash has brought a lot of focus, of course, on rapid aviation growth in Indonesia, where, of course, air travel has become critical for the economy. What lessons have been learned from this plane crash?
Yes, Lion Air's latest crisis illustrates the challenge relatively new carriers face as they try to keep up with unstoppable demand for air travel and, in the meantime, striving for standards that mature markets took decades to reach. Pilot training is one of the lessons that's being learned from a 2013 flight which missed the runway and plowed right into the sea. Investigations revealed that the 24-year-old co-pilot had failed to adhere to the basic principles of jet aircraft flying. Meanwhile, a former safety manager pointed to a troubling attitude at the airline that accidents were inevitable when flights are so frequent. Lion Air has expanded rapidly over 18 years as domestic air traffic in Indonesia more than tripled over the past decade. But high-speed growth, of course, came with a high accident rate that was twice the global average last year. There's also questions now about maintenance. On the most recent crash of Flight JT610, investigators said an airspeed indicator had been damaged during its final 4 flights. Well, what exactly caused the plane to finally crash about 2 weeks ago still remains unclear now, but we know that tragically none of the 189 people on board survived. Clearly, there's another big lesson to be learned here, and the families in particularly will be demanding more answers.
Thank you, Sandy. You know, it's such a shame what those families have to go through. Thank you so much for joining me today. Arise Asia business correspondent there, Sandy Huang. You're watching the Global Business Report here on Arise News. It's time now for another short break.